Morning, all you beautiful people. I have David Baum with me from Cross Country Mortgage. We're doing our weekly series call. What's up, David? How are you?
I'm good, Peter. How are you doing?
I'm
Happy
good.
Tuesday, the 12th, December.
December of 2023. Happy holidays.
Yeah, it's coming up.
So what is one thing that like that stands out in your world that home buyers are looking at?
I think there's one key word that a lot of people have been, trying to focus on as well as we have, and that's really affordability, right?
Okay. Agreed.
Um, there has been massive swings on affordability over the past 2 years, right? People's affordability has dropped from the lows at the end of 21 into 22 to the highs of 22 and 23, people's affordability has dropped well over $200,000, right? And then as, the market has recently trying to improve, right? Because rates have come down a little bit. The data, basically government monitored data called HMDA. It's a lot of, mortgage applications are reviewed. HMDA,
The home
HMDA, right? So the data on that shows that more home buyers are turning to discount points to increase affordability, right? So what does that mean, right? It means that there's an interest rate that you can, that you choose if you don't want to pay any discount points. But if
right.
you want to buy that rate down with a discount point, you can lower the interest rate, which will lower your monthly payment, which in turn will increase your affordability. Now, everyone says, well, how many points can I pay? And it's not so much how much you can pay. The reality is you got to look at, because one discount point does not mean your interest rate drops by 1%, right? You have to look at what is your break even point, really, and whether or not it is worth paying any discount, because you look at how much you save on a monthly basis versus how much you pay. And
Right.
you pretty much got to meet that B2B. It's a benefit to borrower test where they want that benefit to break even in less than 48 months or sooner.
Right. So one of the things that historically, and I hope you can speak on this, and I don't know
Yeah.
if I'm completely off base, but when people ask, at what point do I refi, right? And just as a general rule of thumb, it's like if you can get 1% lower than what you're currently paying, that's usually a good time to refi.
Yeah, I mean that's a big part of it. It's not just obviously that. There's also other factors too, whether or not they need cash or is it just a rate and term refinance, right? So
Just talk,
maybe the rate, yeah.
right.
In general, though, if it's just a rate and term refinance, obviously it's going to depend on that mortgage balance
Right.
because the higher the balance, a rate, 1% may be more drastic, where or less than 1% might be, beneficial enough. It's how much are they going to save on that monthly payment versus how much the cost of the refinance is going to be, and what is the break even on that, right? You always got to look kind of at that break even point, whether it's worth it or not. But most people right now, obviously, that are buying, they're either doing a few things. They're either paying a discount point to try and get that payment a little bit lower and affordable,
Right.
so they can get into something a little more, that they can find, and look to refinance in the future. There is no time frame typically. Usually people wait, 6, 12 months at a minimum. Obviously there's more costs when you refi. You just paid closing cost on a purchase. Typically, lenders do, they want to make sure you're making at least 6 payments, making sure that you're making your payments so you have a good payment history, then be able to refinance as well. But for the most part, it's got to make sense. It's got to be worth it, you know, um, where it's cost effective for the borrower, to refinance. It's not like lenders, oh, you're going to refinance and it's not going to save, it's going to save you $20 a month and it's going to cost you $10,000. That's not worth it, right? It's got to be worth it based on the cost, based on the savings, and the whole overall picture. And it might be beneficial for someone to do a cash out refinance, and pay off some of that high interest debt or do different things, to save not only money on the mortgage, but save a lot of money by cleaning up high interest debt.
Right. And then the other thing that I wanted to ask you is just because what I'm noticing is there is still an appetite from buyers. There was a lot of confusion as rates were going up. And just for anybody that is watching this, rates are give or take roughly about 7%. Low sevens, let's say. They had gotten as high as eight, if not higher, depending on your credit score. The reality is that people are now expecting interest rates to go down. And the predictions are within the next 2 years, we could see as low as low sixes, possibly even high fives. So where does that put my buyers? Getting a lot of questions of, is now the right time to buy? And I'm just seeing it's the competition has, the inventory is still low, and competition's still there. We put 3 offers in the last 10 days, and all above ask, 5% above, and we only got one offer accepted. So yeah, that's where we're at in today's environment.
Yeah, I mean, like I said, the high, I mean, rates were definitely in that above 8.5 range at the peak. For traditional mortgage type thing with, depending on credit score. Rates are definitely low sevens, high sixes. Combination of the market hit a low last week, and then it got a little worse. So, it's hovering that high six, low seven range right now. People are definitely consider can pay some sort of a discount to get it back into the sixes or mid sixes for that matter. FHA, VA loans, we're seeing, high sixes, paying a discount, maybe get to the low sixes. And so, I mean, we're in a much better place. Let's hope it stays and continues to get better. But we're trying to finish the year in a much better place than where we were, 3, 6, 9 months ago.
Right. And one of the other things, and so, and I know it's the holidays, we're all running around trying to get stuff done before the end of the year. Um, One of the big things, and you were talking about the affordability, is, the other portion of this is mortgage apps, right? How many people, I told you I have 3 buyers that are under contract, they're all cash, right? How are you seeing mortgage applications on your end? I know we're working with several buyers right now, trying to find them homes, but are you seeing that kind of tick up as interest rates go down?
Yeah, I mean, it seems like, I mean, usually that mid-November to mid-January is always that little winter lull, where sometimes people take a back seat, but as interest rates are starting to drop a little bit, there was, definitely some more activity up front, people trying to get ready and prepared to buy. So we're still, we're running credit, we're pre-approving people. That part hasn't slowed down. There's still a lot of opportunity out there. Unfortunately, there's just no inventory,
Right.
but there are buyers out there. And as this market shifts and rates drop, there's only going to be more buyers and more competition for the low inventory. So it's, we're telling people to just try and buy something now, because in 3 to 6 months, it may be getting back to that frenzy of 10, 15 offers. If rates are better and there's still no inventory, there's going to be more action again. And it very well could be that vicious cycle of, getting back to 20, 30, 40, 50, 60, 80,000 over full price kind of a thing.
Right. And again, it just depends on where they price it. It's just I'm glad that we're a little bit more optimistic because reflecting back on the last 12 months, I know that this year, at the same time this year, I was not confident about the economy, not that I know anything. That finance degree from Pace University, 1995, degree has has not been needed for a while, but the reality is that I'm just feeling a little bit more confident. Obviously, we have an election year coming up. Not that that kind of says what the economy is going to do, but it's certainly looking forward to being refreshed in 2024, because 2023 was brutal. Just for buyers in general, sellers as well, right? And the trend that I'm seeing is, people are still downsizing, people are still upsizing if they have to. Seeing a lot of people getting the hell out of Dodge and moving down south.
Mhm.
If not even out of the country. So let's see what 2024 brings, my friend. Wishing you a happy holiday.
You too.
What are you doing for Hanukkah and then New Year?
Christmaka. Oh, we got both. We got Hanukkah and Christmas. So just we're in the midst of our 8 crazy nights, and and then obviously we'll spend some time, I think, out in Pennsylvania for for Christmas with the other side of the family. So just trying to get through this holiday season. I think like everyone else in one piece. Just trying to stay healthy. Obviously, a lot of people are getting sick out there. So hopefully, we just wish everyone happy holidays. Healthy, happy. End of the year, and hope everyone just has a really great, awesome 2024. A lot of optimism. I think heading into the new year, even at the real estate convention, you would think sometimes there's a lot of negativity based on what's going on, but there actually was some positive optimism amongst a lot of good conversations. So I think a lot of people are definitely in a different mind frame, and as is the economy and the state of the economy and everything else. So I think I really do think second quarter going forward next year is going to be good. I think first quarter might still be just a little volatile, but I do think second, third quarter we're going to definitely continue to be in a better position, as well as like you said, that election year things are going to start to kick up. So we do all think that there's positive signs with interest rates and the real estate industry heading into 2024 and 2025.
All right. And Dave, if people want to find out what they're approved for, how do they get in contact with you before the end of the year?
Absolutely. Yeah, love to help people out and determine their buying power. 732-853-4969. Best way to reach me. Text or call or hit me up, david.baum@ccm.com.
Awesome, man. Listen, it is an absolute pleasure. I can't believe it's almost the end of the year. I have some vacation time coming up at the new year, so I'm looking forward to that as well. And like I said, it's just I'm extremely optimistic about 2024. Just think that it's we're making some big changes. Obviously, you see the brand logo behind me. It now says real. So we're in a transition, and it's going to be awesome. So,
All right, well, yeah, best of luck at the new spot, and happy holidays, everybody.
all right, talk to you later, bud. Bye.